Ladies and gentlemen of the crypto space, we're live on a Friday, January 19th at 11:31 a.m. Title of the stream is Llamas and Bonds. Kind of where we're going to get to. I need to preface a lot of this content with understanding why llamas and bonds are interesting. All the memes and all the behavior in crypto markets, all the degeneracy, very much symptomatic of the zero interest rate environment that we've seen for the good part of younger generations' entire lives. A zero interest rate environment means the death of fixed income. Means and fixed income obviously has gotten perverted in traditional finance as well. We've seen the leverage that has been applied to fixed income, especially when rates are sub 1% and you lever it up 10, 20, 30, 40, 50 to 1 and you're able to get relatively meaningful interest rates. And that's why all this behavior is so interesting in crypto markets, and it gets people motivated to take action because the rates are actually meaningful. Now, the sustainability of a good part of the rates that are available in crypto markets are highly in question, often very transitory, often dilutive, inflationary, very destructive. But these rates are meaningful. They cause people to take action. And that is rebirthing. That is coming back to financial markets, not just these crypto markets, but meat space. I think the world is in a big transition. Lots of great macroeconomists, Jim Bianco and many others, uh, pretty much expect the 4 decade long bull run in bonds to have found bottom, where we have a non zero interest rate policy by federal regulators. And this creates a very different market than especially everyone that has ever interacted with crypto markets is accustomed to. Now, why is this interesting? Obviously, 2, 3, 4% is quite boring, and MeatSpace accommodated that with extreme leverage. And clearly, crypto markets are accustomed to both relatively high interest rates, unsustainably high interest rates, or low interest rates, and you lever them up. And we have literally have buttons that auto lever this stuff at this point. LSDs, you lever ST ETH 5 to 1. Quite remarkable that we take it for granted when we put the things that have been built and the things that we have played with in terms that are historic, in terms that are very uh, that have existed for a long time in meat space. George, I do have this screen up. There's only really two things I want to put up on the main screen, and I don't want to distract folks. Um, but I'll have it up. So Frax obviously has its bonds, and I want to get to it. I don't want to start with Frax and Curve. Obviously, I called them out on today's stream. I don't usually call out protocols. I usually beat around the bush very much. And as a reasonable and rational preface, I do have ownership in Curve and Frax because I find them quite interesting and outliers amongst the entire crypto space for reasons that we have discussed, and I will try and clarify even better in today's content. So, time horizons are something we've talked about a lot. We've talked about where people are accustomed to 4 year cycles, and Raul has talked about how 4 year cycles are now this systemic liquidity cycle that are centered around sovereign debt refinancing requirements. But there's also longer cycles, and there's trends, secular trends, and it would be a secular trend if there's higher interest rates going forward, higher lows and higher highs. And the biggest takeaway that I have from that is the structure or even the destination of investments. There's the word fixed income is misleading, especially when applied to crypto markets, particularly if capital has been invested in certain types of businesses, certain types of with certain types of expectations. And I'll be specific, the growth sector, where earnings are booming and the prices flows of capital from 401ks and retirement accounts are boosting the price, and the buybacks are boosting the price. And growth is really still, crypto markets and meat space alike, a capital gain strategy, which is a player versus player strategy. Fixed income is an investment where you own something and you are paid to own it. And that's something I've talked about a lot over the last years. And that is a rational thing. Being paid to own something that creates a vested interest, that creates a relationship. There's meaning to that, whereas player versus player is someone, an actor, taking capital from someone else's flows of capital into an investment. And that's very meaningful to me. It's very meaningful to me to understand these types of things because this is the psychology of how and why people engage with markets. Growth versus value, fixed income, cash flows versus taking money from other actors, depending on their skill level, depending on hype and stories, prevailing social media stories. And sure, there's quite a great deal of reason to take part in that. You could get significant multiples in short periods of time. It's not investing. It's not digesting and really understanding the way the system works. It's not understanding a particular product, a particular uh, business, where their income comes from and how much of that income is distributed. And to me, that's just very meaningful. And I like to have meaning in the things that I own. And what's most interesting about crypto markets is the scale and size of the market. So as I said in meat space, if the structure of the system is changing, it means a lot of things are mispriced. It means what is investable or what was investable is no longer necessarily investable to the same degree because flows will start at the margins and the structure of the investment landscape will overall change. And that means significant mispricing currently exists, and when mispricing exists in crypto markets, the price adjustments are asymmetrical. So as folks chase the hot ball of money from a capital gains perspective in crypto markets, sure, you get your multiples in a relatively short period of time, but my expectation is from a rational time horizon, those types of asymmetrical adjustments for mispriced assets will occur for basically everything. And that means you can remain a rational actor and not necessarily chase the hot ball of money, and you're going to do just fine over an 8, 10, 12-year period. And it's not just fine. It's not, all right, it's going to go 2x, 3x. And the size of these markets is microscopic. These assets over a 10-year period could go up 1,000x on the money. And literally, if trillions of dollars flow into this space, there's $80 billion on Ethereum mainnet, and that is the market. So maybe 85, $88 billion is the overall meat of the market. Tron excluded, Binance Smart Chain counts, but the meat of the market is probably $100 billion or less. And for all practical purposes, that's a rounding error. Cue the SEC and recent testimony. It's basically zero. So if these markets and the trajectory indicates that these markets are interesting. And what does interesting mean? Interesting means there's a product and an actual service being offered by these companies, and they're consumed more and more in the future from an investment standpoint, but also a consumption standpoint, then this type of repricing should be expected. And that means these assets are currently mispriced. and time is the only factor. So, two products that interest me the most, or primarily the product that interests me the most, is currency, is liabilities of money. And what is money is a philosophical question in many regards. But as of right now, the prevailing uh, thing in my mind that I get drawn to is the concept of settlement. So the most useful money, the broad, hotly debated topic of money, the most useful way to define it is something that you could use to settle a transaction. Settlement currency, currencies, money, store of value, and all this shit will drive you frickin' nuts. But in the end, to try and peer through that bullshit, what can you use to settle a transaction? And those are dollar denominated assets, or an asset that is dollar denominated, which has liquidity with a dollar liability, which can be used to settle a transaction, which is why I have so much interest in stablecoins, because stablecoins can be converted to a dollar liability on a debit card, a dollar liability in a traditional bank account, which can be used to settle a credit card bill. And a credit card can be used to settle a transaction at a supermarket, a debit card, the same. And that means these stable coins have real world capacity, which means if you are a business and you're interested or in need of credit for productivity, for labor, CapEx, OpEx requirements, this is just a case of regulatory and interest rate arbitrage. Where can you get the best interest rate to do what you need to do from a business perspective? Now, obviously, the vast majority of credit and endogenous monetary expansion we've seen thus far in crypto markets is it's not tip of the iceberg. That has sentiment attached to it, um, but it's microscopic. And I define most of the crypto market as testnet. And folks engaging in crypto from an Aave perspective or whatever lending protocol of choice are playing around with the concept of credit, which is the same thing we do in meat space, except in these crypto markets, they work differently. It's not just credit because you're not interacting with a company that has human underwriting, subjective rules, and policies that are set by boards, and it's deterministic, and that changes everything. So these liabilities, these currency units, are not the same as what exists in meat space. They're very different. They have a different nature. And over time, I expect them to actually be trusted more, possibly be trusted more than liabilities in the real world. And that could be quite interesting from a potential multiple standpoint and how greatly current assets are mispriced with regard to the products and services that these actual businesses offer. So we'll start with credit because really credit is money, money is credit, sure. Uh, and bonds are a type of money, but this is a whole money. Frax has built pretty much all the components of a central bank. And we've discussed crypto markets in terms of an emerging market. So this is a market that has financial products and services that has captured dollars and dollar liabilities, that has collateral dollar denominated, and this business does just like every other central bank. Now with the FXBs and their meat space um, counterpart for a business structure, an actual official entity that is able to buy and indirectly have deposits in banks, have access to reverse repo deposits as well as uh, U.S. government bills and bonds or whatever they end up doing. Um, that is exactly what central banks around the world do. Do you realize that? That's literally what central banks do. They buy and they engage in saving and accumulating the most pristine assets of other countries that have a risk profile associated with them. There's a risk profile associated with U.S. debt. And that's why there's credit ratings from Moody's and the like. And different countries have different perception of risk. And this company, Frax, is interested in U.S. sovereign debt and deposits in U.S. banking institutions that access the interest rate associated with that sovereign debt. And that debt is paid by the productive capacity of the population. So this is this is money. This is real. This is occurring. This is an emerging market. This emerging market has had exogenous flows of capital come into it. Exogenous flows go out as well. And this market now has a capacity to grow because these instruments facilitate collateral. And collateral is used to create currency endogenously. So the best way to describe what has occurred in crypto markets, in my opinion, is a dollar-denominated foreign currency system. I mean, it's like Argentina wanting to dollarize. This crypto markets are dollarized. It's a dollarized emerging market. That's crazy. That's crazy. The dollar's going nowhere, and this is a heck of an emerging market. I'm not even talking about what's up on the screen, Frax. I'm talking about literally the entire crypto space. So I got ahead of myself talking about Frax. What probably interests me most is the infrastructure in which Frax operates, which is Curve Finance. There's a whole lot of stories and opinion, and I like to peer through opinion. With regard to price action and assets, there are actors. Actors have subjective expressions. They have altruistic expressions, either directly or indirectly. And surely the creation and the software development time of Michael and team can be inspected in two ways. There's subjective interest. Everyone is driven by the desire to make money, but also the contribution, the altruism, because these contracts have been created. The software is live for years, and software is still being developed by a team that has grown over years. And once the software is deployed, the lendiness begins, trust begins, consumption begins. And over time, what emerges is infrastructure because of the determinism of the software. Once it is shown to behave as it is expected to behave, it separates itself from subjective opinion. And that's what fascinates me the most about determinism and immutability. It's able to remove the subjectivity, the nature of humanity from the equation. Software that has proven to behave the same over and over and over again. That's predictable. Humans are the antithesis of predictable. So these software contracts are so far from a CRV-USD, from a AMM perspective, especially the NG pools and how powerful they are, have shown to be deterministic. The behavior is quite predictable. And Llama Lend is coming, which is an extension of CRV-USD, which is basically Aave, for lack of a better way of describing it. It's probably the best way to describe it, where people can post assets, lend assets as collateral, or they can lend and people can post assets as collateral to borrow. And that is a credit market. And that facilitates endogenous capital expansion, especially when Curve USD isn't the asset being borrowed. You could actually have liability printing. and that facilitates financial activity. That creates price action. You could borrow to finance a protocols development team, which now it's business expansion. And that's speaking from an endogenous market perspective. So I'm also interested very much in how this bleeds over into meat space productivity. Why would a company not post collateral to assets on their balance sheet, and they choose digital assets on their balance sheet, which is the whole topic of Bitcoin? What kind of assets do you want on your balance sheet? This is an emerging market. The potential for emerging market assets to be appreciated, being currently mispriced, is great. So these are great assets to put on the balance sheet. So you could borrow against them to acquire working capital. So the use case for meat space is clear. We have a whole history of humanity to draw on what meat space does with credit, the good and the bad. And we obviously see what credit has done for crypto markets, this emerging market. And a lot from a speculation standpoint, leverage, but also from a productivity standpoint. All of this capital that has flown in from exogenous sources into these crypto markets has encouraged, incentivized the creation of this endogenous tooling and infrastructure. So everything's in place for this emerging market to expand. It's not now that you want to think of. Druckenmiller talks about you got to be 18 months out, but you could be even further out, and that's time horizon. If the tooling is in place for an endogenous credit and endogenous liability printing and capital expansion, why would it get smaller? This space is primed, filled with tools to expand in the coming years. 4, 8 years. I mean, this generation, maybe it's that's we could say that, has gotten so accustomed to zero interest rate credit environment and constant flows where capital gains and growth stocks were the norm for investing. But it's quite rational to actually invest in companies and enterprise and emerging markets that take time. And that's really what I look forward to the most in the coming decade is the rebirth of an actual investing environment that's not degenerate, where there's stories to actually be told about why these systems worked over the last 100+ years, and why these systems that we're looking at right now with memes and pictures and cartoon characters are actually an iteration that make it better. They fix the problems with why things have broken in meat space. Like literally, Llama Lend, what we're looking at, is a solution to bank balance sheets and their HTM portfolio problems. And you could obviously have an entire conversation, which I'm probably not qualified to talk about how banks operate. But if the collateral on a bank balance sheet is no longer capable of balancing the balance sheet with regard to liabilities outstanding, because the collateral is depreciating, the assets are depreciating, wouldn't it make sense to literally liquidate in real time, instantaneously, to balance the damn books? So these banks have an HTM portfolio where they literally let the assets depreciate to the point where they don't the mark to market value of the assets no longer is capable of servicing the liabilities. What kind of fucking bullshit is that? Was someone sleeping? Was someone literally, these banks, these regional banks, were they literally, well, frankly, a lot of the assets are commercial real estate, so they're illiquid assets. So it gets complicated in meat space, especially with regard to real estate and how illiquid that market is. But fortunately, and especially in crypto markets, these assets are very liquid and instantaneously liquidatable. So this type of system is just very attractive. It was the entire curve platform is attractive prior to this, and this is just crazy because I've always loved Aave, always loved Aave, always loved the money market. I just didn't see it from an investor standpoint. Saw it from a business standpoint, but great tech isn't necessarily a great investment, as I often say. So where's the cash flow? If I'm going to invest, I want to get paid. And the economics, the business structure of what Curve has offered facilitates that kind of payment where cash flows towards folks that align with the business. And that's what voter escrow is designed to do. And there's a lot of opinion regarding voter escrow, but the cash flows to it. And that's pretty much what has been discussed very explicitly from the Frax Finance team as well. The cash flow is going to go to voter escrow. And it makes sense. Persons that lock have the most alignment with the protocol, so they should get the cash flow. So it all makes sense to me. It's just that time is required for the market to realize how mispriced the assets are. And in the meantime, the cash flow is there. So it's kind of a win-win, and it's a no-brainer for me at least. Um, I'll talk about the protocols, but let's also do comments as well. Henry, here early for the llamas. Yes, indeed. I'm very much looking for this, looking forward to this. I'm particularly interested because of Arbitrum, how Frax deployed to Arbitrum as well, their FXBs. Arbitrum, I see as the front runner for Ethereum scaling. Optimism well, quantitatively does not have much liquidity at all. And this is the ultimate way to peer through the bullshit. Um, where's the capital? And the capital's not on Optimism. It's 606 mil. But on Arbitrum, it's over 2 bill now, 2.1. It's at 1.6, 1.8, it's up to 2. And it's a positive sum environment. So I see great opportunity there in a positive sum environment of 3.34%. You're going to see some serious price adjustments to assets. That's a significant increase in capital. And it's not just sitting in liabilities. It's not just sitting in stable coins. It's going to be deployed. It's going to buy assets. So you get a serious repricing with a 3.34% positive sum environment. So Arbitrum is definitely a place to keep eyes on. And a lot of times I wonder or I want exposure. So for a while, and I've talked on Discord that I wanted exposure to Arbitrum. And I always come back to saying, I already have exposure to all this stuff. So a lot of my behavior over the last months and frankly years at this point is that I already have exposure to all this stuff because it's all EVM. And I've talked about this topic where we're invested in EVM, we're not invested in Ethereum. I hope that's very obvious at this point, and a robust team is able to deploy to multiple chains and utilize cross-chain CCTP from Chainlink and Layer 0 and Stargate, or Stargate from Layer 0 to facilitate seamless cross-chain. Seamless cross-chain. That's crazy. That's why tapioca is so interesting. Gotta wait, and we'll see what that means. What does it mean, seamless cross-chain? Not conceptually, but the implications of it can be potentially profound. Just the capital is everywhere all at once. It's a big deal with regard to liquidity, especially. Joe, why is my face not on a llama? The the AI didn't want to do it. I did try though. Is this stream going to be about buying bonds on the long end? No, it's not going to be about actual meat space bonds. It's interesting. What if they remain inverted for a great deal of time? We certainly see higher lows, or at least a breakout from trend on interest rates, on the 10-year especially, of course, the whole long end. Well, it's different this time. That's literally different. For the last 40 years, that's different this time. So implications for the inversion of the yield curve, yeah, that's fine. It might not be different this time. So be specific. There are things that are certainly different this time. and the rate and the trend break on interest rates on the long end is certainly the case. It's different. So I'm interested in seeing what's different this time and where capital flows. The biggest fallacy, the biggest thing to be incorrect about is seeing crypto as part of some sort of sovereign's, some sort of country's economy. It's not an American economy. It's not a European. It's not an Asian economy. This is an emerging market. The closest thing to best describe what crypto markets is an economy in the cloud. So cloud computing means you have a server, but it's not a physical server at a particular location. You can have you can deploy to regions on AWS, and you can have infrastructure scattered across the world in their warehouses. So that's the closest way to describe what crypto markets are, with the servers that are, proof of stake and nodes and validators and proof of work, mining operations, and where are the nodes that actually store the blockchain. So these services facilitate a financial market in a cloud structure, a cluster, a cloud network of networks that stretch the entire breadth of the planet. That's surely different this time from a 14-year standpoint. This is a new financial market, an emerging market that has never existed before, that has a capacity for capital to flow in, engage in speculation, extract opportunity, invest in businesses. What kinds of businesses? The very businesses we've been talking about. Credit, foreign exchange, derivatives, price action speculation, and obviously the base layer stuff, file storage, decentralized file storage, decentralized compute, which is crazy, and that's big stuff. Anyway, metadata, APIs, literally if you're a developer that works on software. I'm digressing for 2 seconds because I'm a mobile developer, an Android developer. So the APIs are using basically AWS and their databases. So okay, so that's what this shit does, except it's a completely different level as compared to AWS infrastructure for your APIs and metadata. What do you think RPC is? It's literally an API endpoint. Gazika, DeFi Futurist, George, a pleasure. How do you know? Oh, Joe, because I had the splash screen up. These comments are obviously dated, but I like to go through them one by one. Um, Tapsy, uh, Joe, that's funny. You could use livestock to settle transactions. Yes. Well, economics and monetary systems are an extension of barter, or an evolution of barter and trade. Off-topic question: when does your Frax USDC position unlock, and what are you planning to do with it? I have meat space obligations, and that's probably going to sit, and I'm going to um, be patient. I don't think I'm going to be purchasing assets, but then again, that's basically a year from now, and I'll have to think about that. Also, are you not tempted to liquidate your CVX position for more FXS? No. There's current portfolio positioning. I think is interesting, and I think it's actually sized right, which is my contrarian brain. Convex and its emission schedule is different than Curves, is different than Frax. There's potential for what Tetranode argues, that uh, Convex doesn't have the same dilutive behavior expectations as other protocols. So it could be it could be a big deal, as Tetranode explains, and I appreciate that. And for me, that warrants a smaller position size because it has the potential to appreciate more. Helps me have a more balanced portfolio in my absolutely crazy contrarian brain. So I'm quite comfortable with the current portfolio composition structure and sizing of things. Um, to play devil's advocate, what is the scenario in which Frax and FXB fails. The same reason you have issues in traditional finance. Something was miscalculated, and obviously in crypto markets, we're well aware of smart contract errors and policy and regulation. Uh, Surely there's regulatory risk who could point figures at anyone, and that could significantly disrupt things. So there's plenty of risk all over the place, and your best bet in regard to risk with regard to investing is to try and find a place where you can sleep at night. Not physically, but mentally. That's the hardest thing because time needs to do its work, and you want to be invested in things to that appreciate over time, will become appreciated by people over time, and appreciate financially over time. But you need to be able to sleep at night, and that's hard. There's a lot of things that keep me up at night at times, but that has evolved over the years, or my capacity to deal with those things has evolved and over the years, and I've become more comfortable. But I'm still pretty uncomfortable at times. Um, but I find comfort in locked positions where you hear uh, more adolescent social media commentators talk about VE tokenomics as the worst thing in the world or the stupidest thing to have that kind of alignment with a protocol. And, and it seems like such a young perspective. So you're locking up capital, so you can't capitalize on the hot token. You can't have that liquid capital. So and no one talks about taxes enough in these markets and all this capital gains and all these airdrops. I I want that. I want to offer that contrarian take from a passive investor, dividend investor, a fixed income investor standpoint, because it's something I observe for myself and something I observe has not existing in markets for a long, long time. And that is a much more predictable environment. That's what Warren Buffett always invested in, that kind of environment where you accumulate capital and you buy things at a frickin' discount that are mispriced. That's how he got to where he is. Simple equation as that. Um, Joe, Bitcoin will fold. I think that is a very strong opinion. I think the best description of what is becoming of Bitcoin is becoming financialized in many regards. The monetary aspect is still strong. It's heading down the path of gold, and gold is a purely adopted financial product at this point. It's been folded in as a collateral asset into the fiat economies of the planet. Look what look what GLD does, and all the contracts and options and derivatives and short selling. Oh my goodness, it's perverted beyond recognition. It's not just a coin, a piece of metal, all the paper associated with it, and all the risks associated with that paper. It's complicated, and that's the destination for Bitcoin as well. It doesn't diminish its capacity to serve as a useful money, and the volatility I think will remain, and that volatility will still be significantly more than many other assets, including gold. Gold is has relatively low volatility, but it's certainly going to evolve. I mean, Udi literally talks about Bitcoin V2, and I agree. And I've seen that for a while with the EVMs, the Bitcoin EVMs that are seem to be popping up a lot. Satoshi VM came online recently, and obviously I have interest in Syscoin and their roll-up Rolux, which is literally it's optimism on Bitcoin. You have optimism that everyone knows about from DeFi markets, yet there's optimism on Bitcoin called Rolux, just like any of these fucking chains that everyone's playing around with, yet no one seems to find it interesting. And that's a perfect example of a great technology is not necessarily a great investment. So how do you size accordingly? And I did, and I and that's fine. It sits well with me. Um, Last week's Bitcoin candle super bearish. Bitcoin looks like shit. But, both are under pressure. Mean regressions are occurring, and it looks like this is what I see from a short-term destination is the weekly time-weighted average price. I love the time-weighted average price right down the pipe. And obviously the time-weighted average price will be different on the weekly, the monthly. I don't really go down to the daily too much. It drives me nuts. So we obviously broke it. So we're heading towards the 100 SMA, which literally happens to be the time-weighted average price on the weekly from a level standpoint. So, all the moving averages are meaningful to a degree. And I like the 50, the 100, and the 200, and obviously the respective time-weighted average price on the time frames. It'd be interesting if we got down to 29. People would be freaking out, completely freaking out. But is that not a clear destination? We're already through the 50. That's the 10 SMA in dark green. Already through the 10 SMA, and clearly that's where you're heading to, that kind of average price. 39,000. So another 1,000 from here. Ethereum is, I believe, much structurally better. Let's go out to the monthly. I mean, these are giant wicks, and that's going to cause a significant amount of volatility. This is surely not a spinning top, or maybe it is. That's a hell of a bar in the middle. 12 days left for the monthly close. Right now, the market is filled with uncertainty. What I like to do from a technical perspective is see levels, and so far, this 2,000 mark, we have failed to break the 2,000 mark since February of 2021. That's everything thus far has been invalidated. Resistance, breakout, invalidated. Resistance, 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 breakout. We'll see if it's invalidated, or we see an expression of support at this level. Levels are probably the most meaningful. Then comes moving averages, of which I value the time-weighted average price the most. And then comes trends. Trends are literally FOMO bullshit, and that hot ball of money rotated. So I don't really like trends much at all. So that's third on the list of interest, and I marginalize it to a great extent. So that's a little bit of technicals. Cap, how can a smaller portfolio participate in Curve? I don't have answers like that. Everyone has to figure out how they want to participate for themselves. The most important thing is expectations versus comfort, and you need the comfort to sleep at night. And all of that is because you have to allow time to do work. You have to set expectations. What are your expectations? If you expect something to go 10x over the next 10 years, does that make a difference? That's just obviously throwing numbers out, but expectations, comfort, so you can allow time to do the work. You're going to see a lot of stuff. Like, I talk about Curve a lot, but it might be a shit investment for a lot of people, depending on your expectations. And it happens to me a lot. Like, I want to own a relatively popular perp protocol. I had an opportunity to own GMX at a relatively decent price, and I didn't take it. I want it. I don't have it. It is what it is. What else? Fucking Celestia, it's damn run. Hot, 17 and change. Should have been more diligent with VPN use to get access to the airdrop because of my historic Atom and Osmo positions, and I didn't. What am I going to do? I'm not going to chase it at these prices. I could have had it at $2 in an airdrop. It is what it is. You got to move on. You got to move on. And that's the most important thing to do with regard to capital management. And that's why position size is so pertinent and meaningful. Can you even acquire a position size that could achieve your expectations? If you can't, you have to move on. You have to take advantage of opportunities that are reasonable, that are going to potentially achieve what you're expecting to achieve. Because the most important thing is to have lowered expectations. Because if you exceed your expectations, you're happy, you're satisfied. If you don't meet your expectations, you're disappointed. You don't want to be disappointed, so you want to set very low bars, low expectations. Hope that helps. Arbitrum revolves around GMX. Optimism revolves around Velodrome, which promotes federations of protocols. I agree that those are the dominant protocols. I look forward to seeing what happens with Camelot on Arbitrum, though. And I can't have the position size I would want, and it is what it is. Um, Velodrome has the tooling for federations, but the assets, what's the point? I mean, what's the point of the assets on Optimism? It's just, you got to remember, all these chains have the same shit over and over again. It's all the same products. Cross-chain swaps, credit, foreign exchange, and derivatives. It's the same thing over and over and over again. So everyone's like, you got to find the fastest horse. All right, great. From a capital gains perspective, you could rotate the hot ball of money. So that's why I like to look at whether it's a positive sum environment. And frankly, I don't really engage in capital gains as active income versus passive income, and that makes a big difference. Big difference. And optimism is a microscopic market with marginally negative sum games still. Arbitrum's a positive sum environment with 2 bill. This is the largest amount of capital of everything other than Binance Smart Chain. Even Solana, I don't think, yeah, Solana's a little bit less than 2 bill. It's about the same. Solana and Arbitrum have the biggest bid right now for capital in the market. What is the better? What is a better way to inspect how well a market is doing with regard to growth? The amount of capital in a market. So this is probably one of the most important pages in all of crypto to see what the hell is going on and what is meaningful. Arbitrum, Solana. I have mixed feelings about Binance Smart Chain, but they sure as hell have a lot of capital. But its federated validator set might as well be Bitcoin's Liquid, which has a federated validator set. Bitcoin's Liquid is literally the same thing as Binance Smart Chain. Federated validator sets. DeFi futurist, you are so knowledgeable regarding finance. How can I learn the knowledge cap? I don't know. I'm a crazy guy. I'm who I am, and I've always just searched and searched until I understood. One of the things that I do well is correlation, modeling. I see the similarity and the commonality between things, and it's like those pictures where you could spot the difference and see the similarities, obviously. So I always compare things to understand things. So the greatest understanding of these markets, crypto markets in particular, is because I understood how traditional finance worked, and vice versa. So to understand crypto markets, you certainly have to understand real economic systems of sovereign nations. And to understand the deficiencies of sovereign nation economies, you have to understand these crypto markets and why they're meaningful. What are they doing that's different? And what is every protocol and every chain doing? The same thing over and over and over again. It's like literally, it's insane. Insanity doing the same thing over and over again, expecting different outcomes. It's the same fucking products and services. This is all just credit, liability printing, stable coins, foreign exchange, which is a swap. It's an AMMs or FX. FX. They offer FX. If you're swapping from one token to another, it's a foreign exchange of one denomination to another. What is it? Mugatu from Zoolander. I feel like I'm taking crazy pills. It's really crazy. I don't have an answer for that, DeFi futurist, but obviously Real vision is great for macroeconomics and traditional finances, and I can't. I mean, they talk a lot of crypto, but how do you put this puzzle picture together in your head is ultimately what everyone needs to try and do, and everyone will put it together differently. And my opinions are just me, who I am. George, you're very welcome always. Which position of your portfolio pays you in SDFX? Oh, those are from Vote Market. Those are Frax's. That's staked out, puts up vote rentals for their probably their LPs, and that comes from Vote Market for VEFXS rentals. Um, Henry, Noah, are there any new altcoins with actual novel utility that currently interest you? Novel utility? The buzzword of buzzwords, utility. Credit, FX, derivatives. That's it. Unless you're investing in Filecoin, I don't really see any APIs, and that would be very interesting. But I think that the time is not ready for it, and the time is certainly not ready for decentralized compute. Albeit this is literally what smart contracts are, is decentralized compute. But it's the same products over and over again. So ask yourself what interests you the most: credit, foreign exchange, or derivatives. Derivatives would be like LSDs, long and short products, maybe investment in a perp exchange. How many of them are there? Um, and then ask yourself, you have to define what is a good investment. What are your expectations? Is it literally capital gains, in which case you literally have to hover around social media all day long to try and find the hot ball of money? And from a technical perspective, technical analysis, and you find the trend, because the trend is showing you the flows, is showing you where the hot ball of money is. And you're seeing the cost basis reset, and you're seeing the breakout, and you're going to extract whatever the hell you're going to extract from a capital gains perspective. It's not investing, that's trading, that's PvP, player versus player. Altcoins with novel utility. Altcoins are an attempt to put a word on um, a way to have exposure to a business. I don't do meme coins. That's all player versus player. There is no utility. I don't even care if there's a tax. I don't care if there's a burn or whatever the hell they want to call it. There's nothing there. And you could talk about, yes, culture and the meaning of culture and the formation of money. What is money? So stuff like Doge, it's got billions of dollars worth of value, which is meaningful. I don't need exposure to that. I want a more stable form of money, no less volatile, that doesn't have the hype. And clearly, even Bitcoin has the hype. So that's a great topic. What is money? And that's changing because of certain meme coins. But the market tells you what meme coins are moneyfying, monifying, becoming a type of money, fucking volatile money. I have no interest in that stuff, for better or for worse. And clearly multiples are made on stuff like that, but whatever. Um, no, there is no altcoins that have novel utility that interest me. Tapioca's coming out. Tapioca is quite, and I have an allocation for transparency. Tapioca, seamless cross-chain liquidity, a credit market. Crowded space, but it is novel. It's probably, from what I see from audits and discussions, the most advanced protocol possibly in the entire crypto space. Layer 0, seamless cross-chain credit market. Novel tokenomics. They were aside from Andre and Fixed Forex, they were the first to offer, options as emissions instead of purely dilutive emissions. So that means they're able to build POL, protocol and liquidity, unlike anything, So that's going to be very interesting to see how the market responds to that kind of business. And simple as that. I look forward to seeing, and that's coming sooner than later. That's been in the works for a long, long time, and that's not new. It's been talked about a lot. They've been doing their podcast for a long time now, but the market has yet to see it in action, obviously. And I have a high opinion of the due diligence they've extended to get it out, production ready, reliable, and tested. Because this is dealing with money. You're dealing with real money. I don't give a shit what coin you own. I don't care what crypto or stable coin you own. You're dealing with real money. So this is not a kid's game. This is to be taken very seriously. This is not just investing in business. This is your business. You are engaging in business when you are dealing with cryptocurrencies. Um, Jordan, still a fan of Redacted Butterfly? Yes, I am. It has done very, very well. I like what Redacted has done. I mean, this is part of the Tetranode family, and he's just an old ETH guy from back in the day. And he just had a lot of capital heading into 2020 and 2021 when people figured out that, DeFi is an emerging market. And his suite of businesses, he's well positioned. He's going to do very well over the next 10, 15, 20 years, probably. 20 is a long time horizon, 10 years. So I'm a fan of Redacted. It's an ETF of sorts that surfaces significant cash flow, and it was mispriced given its appreciation. Where the hell is Redacted? Where's the hell is Butterfly? BTRFLY. Off 13% because it's up like 300%. Oh, wow. Look at this damn chart. Wow. So this is an interesting level. You see probably a lot of chop, but there's a look. This is one of the clearest ceilings that you could stare at. It's like, holy crap, look at that ceiling. Fail breakout. Very early. Doesn't mean nothing, but sets a base level. Failed breakout. Confirms a level. Failed breakout. Further confluence of a level. Very interesting. It's a hard pill for me to swallow, 371 compared to 100. 376%. 3.7x on the money. You're buying at a significant premium. So it's not, I don't need an exposure to it. I already have exposure to it. Butterfly does well. It's accumulating assets, it's sterilizing and recycling, and it's encouraging capital inflow that disrupts circulating supply of the assets that I'm interested in because they're interested in it. It's like I would rather own the assets that ETFs own than owning an ETF. And that's that. Hope that helps. Cap, how do you learn sovereign nation economy? Real Vision. Search it. Well, now that AI and ChatGPT and whatever Claude are available, ask it all the questions in the world. Obviously, in 2020 and 2021, there was literally no AI, even in 22. But since these systems came online, man, you can ask so many questions, and it will tell you everything, and it will never get bored of you, and will keep on talking. So that's the only way to understand these things is to never stop asking questions. It's both a curse and a blessing to ask questions. What's your opinion on Manta noise? So from a Cosmos perspective, I have a very high opinion of the Cosmos network of networks. Why? IBC, seamless cross-chain. Cosmos is crazy. Um, I have exposure, Atom and Osmo. Osmo was airdropped to Atom a long, long time ago, but it has done very well. It's a very large airdrop. Um, I don't need any additional exposure. I really don't deploy much at capital at all. And we literally talked through 23 and 2022 and 23, it was like four capital deployments over the years we've talked about. So I'm a very prudent investor now. 20 and 20 and 2021, I don't know. I can't explain the past. You'll get to where you get to in life and you'll wonder how you got there. You know, I don't even know how I survived my 20s. I have a feeling a lot of people say that. Mantha, Noise, Celestia's interesting. Say, Sui, the modular parallel stuff. Very interesting. What do you think Fractal's going to be? Frax's blockchain. And Ethereum L2 isn't even in the docs. Fractal's coming. So folks are chasing the hot ball of capital over on, it's not even a hot ball, it's microscopic. An airdrop. Oh, they airdropped you 20 grand. No, they didn't airdrop you 20 grand. You have to sell it, and then you have to do all the things associated with selling it, meaning reporting, accounting, so on and so forth. Airdrop, free money. That whole airdrop farming shit is a lot of noise. Chasing. That's the worst thing that I have in my memory of chasing capital. Real money is made when the capital comes to you. It's not chasing it. It's not succumbing to that little voice in your head, that anxiety, that pit in your stomach that you're missing out. You could have done something. It's going to drive you nuts. That's why the rebirth of investing means so much to me, because that's how you sleep at night. I look forward to Fractal and their blockchain. So FXBs are our money. The way it's done is a discount to face value, and one FXB is always equal to one Frax. So they always have a capacity to. So since you're buying an FXB with Frax, you always have a capacity to get your capital back. So it's risk-free, Frax denominated. So where's the risk there? You're dependent on the AMOs. And they're dependent on Curve. So Frax is existentially tied to Curve because they have ownership and a capacity to influence Curve emissions, which finance or facilitate a capital efficient way for them to finance their operations, peg management, their stablecoin, their dollar liability. They are existentially tied together. And that's interesting because there's a large network of a federation that are existentially tied to the existence of Curve, which increases the likelihood of Curve continuing to exist. When there's vested interest, they will do what they need to do to help and support the protocol of which their existence is dependent upon. Hope that helps. Cap, can you please turn on subtitles for us non-English natives? I have never looked into actually how to do that, and I don't even know if the subtitles can keep up with me. I speak the way I do. I will take a look though. Hope that helps. No one get annoyed with my questions. Never. The most important thing people could do, one, is ask questions, and the measure of a person is their capacity to answer questions while not being annoyed. No question is a bad question, ever. The only thing to question is a person's capacity to respond to a question. Diego's in the house, a pleasure. DeFi futurist, my man, you had it once. Yes, indeedy. Topic was really, obviously, about bonds and about liabilities and emerging markets. And FXB's just launched. So this is interesting because they're actually acquiring in real world meat space terms US bills. So that's where income comes from, and that's and Frax units, Frax liabilities, dollar liabilities. That's what a bank does. And they have a balance sheet, and a balance sheet has double entry accounting, assets and liabilities. And a balance sheet of meat space banks is managed like shit. Hence why the HTM portfolios are screwed. So these balance sheets, do I have it in my URLs? Frax. Do I have the Frax has their balance sheet. I don't have it in my URLs, but Frax has their balance sheet published publicly. It's real time. That's crazy. And the lending protocols, the FraxLend and their BAM and their these this changes everything relative to what the hell occurs in meat space. And that's not just interesting from an investment standpoint, that's hopeful. Hopeful that systems can be built realizing how fucking stupid these banks are and these people that they are specifically with regard to antiquated and deprecated. But then again, that's a market, and the market will appreciate new systems that are not stupid like the old systems. Now, if you're frustrated with the old systems, because you can obviously tell that I'm a little frustrated with the old systems, you look for solutions. And these are solutions. These are better systems than anything that banks and central banks have to offer. If it takes the humanity out of the equation. Determinism and immutability are what's novel in crypto markets. That's why Bitcoin is novel. Deterministic or highly immutable monetary policy. It's going to, and it's based on consensus, which is literally governance. And the consensus and governance of a company is their board of directors, bunch of old white pasty boomers that make decisions. Except with Bitcoin, it's all the miners, and they don't really want to mutate the monetary policy because they're dependent on it for a livelihood, which is why Ordinals is doing so well. They don't want to mutate and filter it out because it makes them a lot of money. And that is capitalism, free market, consensus driven by the market. That's why crypto is so god darned interesting. Um, Thank you, DeFi Futurist. I appreciate it. Athletic Concept, last couple questions, we'll wrap it up. Hey, Noah, 28 years old, and I'm finding it hard to really make the money in the space. Everything pumps fast and dumps. Current products are meant for passive yield, so principal amount needs to be a lot. Yeah, the problem, first and foremost, trying to make money. When you try to make money, you will not make money unless you're lucky. Don't try and be lucky. The vast majority of people that try and make money don't make money, they lose money. So obviously, I'm speaking from an experience standpoint because I honestly have been lucky at times. But that doesn't work for the majority. And that doesn't mean you should be hopeful to be the minority. It means the most appropriate thing for me to encourage is to not try and be lucky, but try to be smart. Try to be the right curve. The left curve can turn 10th grand into millions, but it's only few. 0.01% of people in the vast majority lose everything. The right curve has a risk management idea in their mind. How much risk are you taking? Portfolio size, portfolio composition, so on and so forth. So find the right curve. Stop trying to make money and know that you have time on your side. If I'm 40 and you're 28, you think a 10-year time horizon. By the time you're 38, what are your goals? What are your expectations? And you can accumulate over time. You know, you can. They do. That's what a 401k is. You're literally just taking a part of your paycheck, and some dumbass fund manager is dumping it into some bullshit on the stock market Ponzi scheme. Except these are much better investments than anything available in the stock markets around the world. 401ks are the most gross product I could possibly think of. Passive flows is disgusting. You're literally paying for boomer retirements, keeping their assets inflated so they could draw on them for the next 20 years while they're retired. No, no. Gonna get you nowhere, 401ks at all. So think about the concept of DCA and accumulating. And the question is, accumulate what? You don't want to accumulate things that target the left curve. You want to accumulate things that are intelligent financial products and services that are businesses. But that also implies understanding why these are businesses and why these are innovative, iterated financial products and services. And that means you have to understand the real economy to compare to these products and services and why they're so much more interesting and why they fix so many things with what has been built with corporations and the regulators that required 1,001 intermediaries in the goddamn treasury market. It's disgusting. All the shit that Gary Gensler talks about with regard to separation of entities. That's because of risk, and that's because of a capacity to regulate. Put it all under a couple of smart contracts and get the people out of the equation and ensure that it's deterministic and it cannot be changed. That changes the whole concept of regulation because that eliminates those or modifies those counterparty risks and makes them completely transparent. You can literally inspect balance sheets on chain, live, real time, block by block. Oh my God. Anyway, I get excited. Ladies and gentlemen. 24 people towards the end of the stream. 10 likes. Smack that thumbs up button, please. Thank you very much. Everything pumps fast and dumps, of course, because it's stupid. It's left curve, hot ball of money rotation. And it's not investing. It's literally just capital gains. That's noise. It's noise. All noise. What you want is is how much liquidity there is. There's $70 billion on Ethereum. What do you think happens when it's $700 billion? Where does the capital flow? You know, when you have a meme coin or some bullshit that pumps and it dumps, it's because someone capitalized on everyone else. If 10,000 people pile into a coin and pump it, 100 people are capitalizing. And who are those 100 people? That bought it before the 10,000 people came into the market. And they're getting 10x on the money, 100x on the money. And what are they doing with that money? Oh, sure, maybe they're doing it again, capitalizing again, being early, buying low, selling high. At some point, they're going to invest. They're going to want to buy businesses because they're going to want to do passive investing to get uh, uh, not active income but passive income, because active income requires work to be faster than the herd, be first and not last. Curve products are meant for passive yield, so principal amount needs to be a lot. Yes, passive yield requires a person that's older or has more capital. 25, 30, 40%. Now the complexity there is 25, 30% seems like nothing with a couple $1,000 portfolio. And it is. The complexity there is also understanding the potential asymmetry of these products. Um, if 25% yield remains and principal, your basis in an investment runs 10x on the money, now that 25% yield isn't 25% yield, 250% on basis yearly. So that could be quite interesting. And that's not something that's the case. Typically, yields are inversely related to price points, or at least subjectively determined by boards. Dividends, especially from corporations. Oh, Amazon stock is up, and the board's going to bump it a quarter percent, bump the yield a quarter percent. It's a subjective decision. But these systems in crypto markets are not subjective; they're deterministic. You could easily have many protocols run a 10x on basis, and you still get it to 25% because the emissions are not necessarily correlated. They could be float rental emissions, and they're still paying 25% on the principal price on your basis. So that would be crazy. So passive yield versus active capital gains, PVP, it's the age-old question of how to engage with these markets in a sustainable way and not take excessive risk and grow your capital over years, not days and months. And stop feeling like you missed out on some stupid pump and dump. That's the most important thing to learn. Facts will be central banks. Well, that's one of their stated goals. So what is a central bank? Ultimately, it's a label that reduces to behavior, functionality, systems. So yes, but literally by definition, the products and services offered are consistent with that of a central bank. It is what it is. A bank is a bank whether it's called a bank or not. Aave is a bank. It's a money market. Uh, Uniswap is a forex exchange. That's kind of redundant. It's a forex market, foreign exchange market. All these AMMs are forex markets. When you log into Interactive Brokers or you log in, you go to um, a currency exchange at the airport. It's a currency exchange. That's literally what these exchanges are. You're changing one denomination to another. These are forex markets. A bank is a bank whether you call it a bank or not. I find that's an old statement I've said for years at this point. Um, Henry, I regret buying into 401k. They sit on my money and barely get anything done. Well, equity markets haven't done anything for 2 years. 0% gains in 2 years. That's equity markets. I myself, for a decade plus, had 401ks. I rolled them into a rollover. And years ago, I did whatever the hell I did. I still have capital in Roth IRA, which I put money into and like an idiot. At this point, um, it's literally spot gold in the Roth IRA and uh, a Bitcoin ETF. Check back in 10 years. I mean, you literally can't touch a Roth or IRA until you're 60 million years old. So I might as well put that capital in there. It's going to outperform whatever the hell happens in equity markets. Meat-based businesses with boards and humans. Well, everyone has to realize things at their own pace, Henry. You have to understand things before you take action. And don't feel like you need to understand things. You have to try and learn new things, and then your understanding of things changes over time. And when you understand things differently, decisions become different. But you can't make decisions unless you understand things, because it's the understanding of things that says, all right, this is a good decision, this is a bad decision, this decision carries how much risk. And it's complicated, but this is all a journey. That's what Raul says often, calls his new stream the Journeyman. It's all a journey of self-realization, revelation. Holy shit, that's how the system works? Holy shit, that's what they're building here? The journey of realization. Frankly, not just how the world works, but who are you? What are your goals? What do you like? What do you want to invest in? What is meaningful to you? And in good part, a portfolio is a manifestation of who you are, which is why a lot of folks like, oh, the hot bowl of money, because they're greedy. Everyone's greedy. They want money. But that's a manifestation of who they are. They want to, like, you remember, I don't know, in 2020 and 2020, Safe Moon. Oh my God, the TikTok videos were gross. The exuberance is disgusting. Man, there's some videos that I could probably find that just are like a pure expression of absence of rationality and just pure greed. Fast money is not good money. Dinner table investing. You got to be able to tell a good story about what the hell you did and why you did it. Otherwise, what's the point? DeFi advisor in the house. Iden as well, thank you. Last responses. I'll wrap it up. How are you? I'm good. I'm good. We had the llamas on today and Leviathan. Oh my. Um, I wish I had more time. I would love to stop by sooner than later. Yeah, great people. However you look at it, yes, indeed, llamas are very interesting. Memes on a heck of a brand and a heck of a product, and that's me, and that's meaningful, not meaningful, meaningful. In my sick mind, that's what I say out loud. Always speak your mind. Don't hold anything back. Thank you all for joining me Friday, January 19th at 12:51 p.m. You know the deal. Tell everyone to subscribe because we could do a little bit better. 24 people made it to the end of the stream. 13 likes. Click that thumbs up button. Link in the description for the most rational community in the entire crypto space. I appreciate everyone in there. I will see you guys next week. Peace.